Welcome to Investor's Guide, and I hope this show finds you really well in the beginning of a new year, ready to get to work with your investments. Remember, on this show, we've been helping you over the last 6 years now to find the right mutual funds and make the smartest possible investments. That's what we're going to continue to do through the course of 2015, which is why this is such a special episode. On this show, we'll give you a list of the best funds to invest in 2015. And before we go further, I want to give you a quick reminder that next week we're going to do a special show on gold. So if you have questions, you can feel free to write to us. On this week, of course, we're talking about the best funds to invest in 2015 across all categories. So you should grab a pen and paper and write them down. If you can't write them down fast enough, then send us an email and someone from our team will send that entire list to you on email. It'll be our pleasure to reach out to you. Of course, I can't give you the list of funds without introducing the architect of that entire list. Kumar is our mutual fund expert. Thank you so much for joining us on Investor's Guide. I hope the new year finds you well.
Thank you.
But before we go into the list, I want to also very quickly ask you what your criteria for choosing these funds were and how you decided that these are the top funds to invest in during 2015.
No, first and foremost, we follow the classification. We classified it based on utility, which is, there are investors who seek aggressive growth. There are investors who aspire for growth with reasonable stability. And there are investors who are very conservative. So broadly, I would say that most of our categories are anchored around these three orientations. So long-term great outperformance vis-a-vis its benchmark or vis-a-vis other funds, vis-a-vis peers, other funds in the same category. That definitely is the factor. But that was our universe in the first place. Giving slightly higher weightage to near-term performance because a fund which is sitting on its old glory and still enjoying the rating may not find a place here.
All right, so we're looking at long-term performance and we're looking at those funds among that entire universe that have outdone their peers in the near term. Dhirendra, I want to ask you a question about the entire list because I've had a look at it. A lot of it is very different from last year. There are a lot of very new funds that were not mentioned in last year's list on this list right now. For an investor who's watching at home, how should he be using this list? Is it a list that I should use if I'm making a fresh investment this year? If I've invested in last year's list, should that at all make me nervous? At this point, what would you recommend we do with this list right now?
No, one is that, yes, this is, if you are trying to build a portfolio, this list looks most attractive today. But that doesn't mean that the fund that you hold, because, beyond this is a very narrow list because we have kept the whole focus on selecting 2-3 funds from respective category. So that doesn't mean that this is the exhaustive list. I don't think, you should be guided by this list to churn your portfolio.
So this is really important. Before we go any further, I'd like to press the point one more time. These are funds that you should use on this list if you're making a fresh investment or you're picking a new fund this year. This does not mean that you have to toss out the entire list that you already have. This is for new investments given where we stand at this point. I'm going to start, of course, with equity funds, and we'll start with multi-cap funds. This is our list for top multi-cap funds to invest in 2015. Right on top at number 1, the Mirae Asset India Opportunities, Quantum Long-Term Equity, and the ICICI Prudential Dynamic Fund. Dhirendra, Quantum Long-Term Equity and iPru Dynamic Fund have been on the list last year as well. The new entrant here is the Mirae Fund. Now, if we look at, and I go by what you gave us as criteria, if we look at the one-year performance of this fund, it's a little middle of the pack. It's not exactly, over the last 1 year, it hasn't really led the pack per se, although its long-term performance has been impressive. Tell us why it makes your list.
Looking at relative performance, in 2014, it is ahead of the average in its category. That apart, consistency of performance, if you look at, this fund is just about to complete its 5th year. And it didn't have enough, long history. Today, I can say that it has been through a full market cycle. It has seen a good, rising phase of the market, which was in 2014. And I think it has come up very well. Before that, this fund had only seen the bear phase of the market, and at that point, it was extremely impressive. So I would say that this is a validation of, we were trying to validate how it does when the markets turn around. Because all its good performance so far was built in a bear phase. So that's the reason why we find here it has been an extraordinarily impressive fund.
All right, so remember, these are multi-cap funds and these ideally suit investors who have a long-term horizon of 10 years and above. And we'll give you that list one more time so you can write it down. Right on top is the Mirae Asset India Opportunities, followed by Quantum Long-Term Equity, and of course the ICICI Prudential Dynamic Fund. Let's move on now to the large-cap equity funds. This is our list of large cap equity funds to invest in 2015 if you're looking to make an investment. Number 1, BNP Paribas Equity, HDFC Index Sensex Plus, and of course the UTI Equity Fund. Then again, HDFC Index Fund is making the list again from last year. BNP Paribas Equity is a new addition at this point. Tell us why it makes your list this year.
One is that BNP Paribas large equity has been a very impressive fund through a very difficult phase, and now it is actually, it has sustained its performance. This is a fairly old fund, but we saw that a fund manager change and the performance subsequently, and it has continued its good work. That's why it finds a place here. It has been among the most impressive large cap fund. That apart, HDFC Sensex Plus Fund, I like this fund simply for its very well spelled objective, that what it will do, it has a defined universe, and it is a Sensex Plus. Sensex Plus meaning that it 20% goes beyond Sensex stocks, and that is from where it derives its alpha, and it has done well. It throws no surprises.
All right, so these are the large cap funds to invest in. Remember, if you're slightly risk averse, you don't want mid caps in your portfolio, this is a good way to go. This is our list for 2015 if you're looking to add a fund to your portfolio. The BNP Paribas Equity, the HDFC Index Sensex Plus Fund that we just talked about, it's so interesting, and the UTI Equity Fund. Those are the 3 funds on our list. Moving on now to our mid and small cap category. Top of that list is the Franklin India Smaller Companies Fund coming in at number 1. HDFC Mid Cap Opportunities at number 2, and the DSP BlackRock Micro Cap Fund at number 3. Out of these 3, Dhirendra, the HDFC Mid Cap Opportunities is the only one that comes back from last year. The other 2 are new. Tell us why you've put this list together.
One is that Franklin India Smaller Companies Fund has been the most impressive fund. And of course, 2014 was the year when these funds got an opportunity to demonstrate. We didn't have history in this category because 2013 or 2012 was not a year when these funds got any opportunity. So it has been, all these funds, this whole category as such, was a test of patience. And 2014, it has got an opportunity. That's why we see these changes. In 2014, we did not make any change. This fund has come to life. This is on the forefront, and this is a category in which the fund manager's brilliance is visible only in a rising market, and this is where it has come. It is looks well ahead of most other funds in the category. Likewise, micro cap. As you'll recall that, micro cap, it has been part of our portfolio. We have been recommending investors to hold it for the good times, and in good times it has proven again. I think it's a kind of fund which, if an investor is wanting aggressive return, has the patience, or in a rising market, this is a kind of fund which can race well ahead of the broader index by a wide margin. And these funds can also be very disappointing, as we saw in last few years.
But Dhirendra, we are in a good market right now, and that obviously means that a lot of investors will feel aggressive, will feel positive about putting their money in mid and small cap funds, especially given the kind of returns we saw over the last 1 year, which were phenomenal. But tell me this, given what we're seeing happen in the global markets, with the price of crude falling, there is a likelihood that we might see another correction in the market. So for those of our viewers who decide to pick up mid and small cap funds at this point, what should they be prepared for?
They should be pleased with any kind of correction that comes in their way, because they'll be able to buy cheap. And if you are thinking for investing for 5 years and more, then I think for most investors, a market which has gone up by 40% and still rising may not be a good news. So look, this perspective will actually please you.
All right, so remember, this is our list of funds to invest in 2015. And like Dhirendra said, that if the market has come down a bit, that's actually good news for those of us who are long-term investors. Now, this is our disclaimer to anybody who's using this list. You have to only invest through an SIP. Do not put in lump sums into any sort of equity fund. And you have to be prepared to stay invested for the long term, which in our book is at least 5 years and upwards. So if you're going to put in a lump sum or you're going to stay invested for the next 1 year, then don't come crying to us. Now, if you want someone to send you a copy of this list, feel free to write to us and someone from our team will mail you the entire copy. But after the break, Dhirendra will stay with us. We will talk about tax saver funds because we are in the tax quarter. We talk about aggressive tax savers and conservative tax savers, our picks for the year. That's on the other side. Don't go anywhere. Welcome back. You're watching Investors Guide in ET now. We're back with our list of top funds to invest in 2015. Remember our clauses: only use an SIP, invest for the long term, and these are funds for fresh investments. So the ones that you have right now are just as good, nothing to worry about. We're now talking about tax savers with Dhirendra Kumar, and it's time to talk about our aggressive tax savers. So these are tax savers, just like others, 3-year lock-in, but they take a slightly more aggressive tone on the market. So they're meant for younger, aggressive investors. This is our list of tax saver funds. Right on top at number 1, Axis Long-Term Equity, Reliance Tax Saver are the two funds that Dhirendra has picked. Dhirendra, you only picked 2 instead of 3 on this list, but tell us why Axis Long-Term Equity makes your list. It has been a phenomenal performer, outdoing its competition both on the 3-year and the 5-year term. But what can we expect from it going forward?
Going by the selector, it's a mid-cap fund. And being a tax-saving fund, one should be investing in such a fund simply because you are getting locked in anyway. And one should definitely be, most investors should look at these tax-saving funds for a time frame of much more than 3 years. But that apart, the quality focus and, clearly stated mid-cap portfolio, that has done the job for this fund. And I think possibly that, this fund started in very, difficult market. That has driven the whole focus. And if they are able to withstand this, or if they are able to continue their focus of, it might be difficult to manage this fund in a rising market with that conservatism. I really like a high-quality portfolio which is performing. So selectivity, which has been visible here, that has led to the selection.
All right, a quick recap on the 2 funds that have been picked out as aggressive tax savers. So they're tax savers that focus on mid-cap stocks and you will be locked in for 3 years. So Dhirendra says that's a good idea. Axis Long-Term Equity and Reliance Tax Saver. We also have a list of conservative tax savers for those of our viewers who are conservative: SBI Magnum Tax Gain and Franklin India Tax Shield. Dhirendra, tell us why these 2 make your list.
No, one is that they are back on track. Particularly Magnum Tax Gain, which had a rough year, a couple of years. And but both funds typically are reasonable, are large cap tilted funds. So if you are looking at, if you're a conservative investor, you don't want a very high return, but at the same time you want to protect the downside. These are relatively conservative tax saving fund, and which by their design has been focused on large cap stocks.
All right, so that's a recap on your screen right now of our tax saver funds, both the aggressive funds and the conservative funds. Remember, if you haven't done your tax saving yet, in spite of all the repeated reminders you've received on this show, it's not too late. Try and do it now. Don't let the opportunity go past. You can, like Dhirendra said, use these names and do it over 2 or 3 tranches. So spread it out over the next couple of months and make sure you make those investments right now. If you're looking at making investments for the next year, then this list will suit you as well. Let's also talk about balanced funds. These are equity-oriented balanced funds, which means that they're a mix of debt and equity, but they're largely equity funds. This is our list for 2015. Right on top, the ICICI Prudential Balanced Advantage, Tata Balanced, and the L&T India Prudence Fund. Dhirendra, L&T India Prudence is making its first-time appearance on this list. And I remember there was a lot of worry among our viewers when the shift happened between Fidelity to L&T India. Are you happy with what you've seen in this fund, and why does it make your list at this point?
Superior performance and a disciplined management visible here. Because what I find in, there are superior, better performing balanced fund in this category. In fact, we have the biggest balanced fund, which is HDFC Prudence, which is a very popular fund. It has a loyal following. It's the largest fund in the category. And but the equity portfolio is entirely mid-cap. So that actually, is quite intimidating to the first-time investors. My understanding of a balanced fund investor is that he's conservative, he's scared to get into equity, but he's still looking at long-term good growth. And the biggest advantage, what I look at deriving from a balanced fund is a disciplined rebalancing. I look at, tax efficiency, which is provided by the design. These balanced funds typically invest over 65% into equity and remaining into fixed income. That makes my long-term gains completely tax-free. So, and for conservative investor looking at growth, seeking growth, they turn out to be a reasonably stable vehicle. But a mid-cap orientation or a very aggressive equity portfolio turns out to be as a big put-off for such investors. That is why these kind of the three funds which you find here are very conservative balanced fund. Their equity allocation is dominantly large cap. They provide the highest stability. At the same time, they don't miss out on the big moves in the market.
All right, so there you have it, reasons to invest in balanced funds, and of course they're tax efficient, they rebalance themselves, which makes them best suited for investors who don't want to do a lot of managing of their portfolio. I'm going to give you a recap of that list. ICICI Prudential Balanced Advantage comes in at #1 this year, Tata Balanced and L&T India Prudence Fund. We're going to take another very quick break, but when we come back, we're going to talk about debt funds, income funds and short-term funds. When should you use them? And what are the funds to use this year? That's on the other side. Don't go anywhere. Welcome back. You're watching Investor's Guide. Thank you so much for staying with us. We're, of course, talking about the best funds to invest in 2015. Dhirendra is still with us. We've talked about equity funds. We talked about tax savers and balanced. It's now time to talk about debt-oriented funds. We're going to first talk about income funds. And Dhirendra, I want to very quickly ask you this question before we even start talking about these funds. Given where we are in the interest rate cycle, we're getting a lot of questions from viewers who are asking us, is it a good time to possibly take a punt on a debt fund, because we know debt funds tend to benefit when rates come down? Is that something you would recommend at this point for both income funds and short-term funds? How should we use them in our portfolios?
No, one is that, taking a punt on equity compared to debt is very different. The worst case scenario in debt is that you will not be bankrupt. You can lose your capital a bit, but a bit. You don't lose your capital completely. In case of equity, the worst case scenario could be very bad. Debt never becomes a multi-bagger, while equity does. So in that sense, yes, it is about time to, if you are a fixed income investor, if you are a conservative investor, if you don't want to take chances with your capital, and in India we have large number of long-term fixed income investors. For them, this could be a good opportunity. This could be a good time. If you have large amount of money lying in your fixed deposit, it should not be like that. It should be into fixed income fund. Last year, we see that debt funds have been able to deliver nearly 12 to 16, returns ranging between 12 to 17%. And I think if we see a 50 basis point rate cut in 2015, that could be sustained. And then there could be successive rate cuts for even in coming years. So because interest rates are very high, and they will only likely go down over years. So from that standpoint, it could translate into something significant. But I would say how much? This is because rate increase in return from debt fund is a one-time affair. In this case, it can linger for 1 year, 2 year, 3 year. And it will be useful because, after the last budget, it is important for investors to look at that, post-tax return. Because unless you hold your fixed income investment for 3 years, it will not be treated as, capital gains. And that makes it very attractive because your return can be nearly tax-free if you hold your investment for 3 years adjusted for the inflation.
All right, so there you have it. That's how you should be using debt funds. And of course, if you have questions about any of the funds that you're hearing on the show, you can write to us. Our email ID is at the bottom of your screen. Let's take a look first at the income funds. Reliance Regular Savings Income is on the list. Tata Dynamic Bond Fund and UTI Dynamic Fund. Dhirendra, the first fund, Reliance Regular Savings, has done remarkably well. Is this a good time to begin an SIP in this fund?
No, I would say that, fixed income funds are not, you don't have to necessarily do an SIP. Yes, if you're a very conservative investor, you are wanting to do your recurring deposit, then these funds can actually give you a little more return. But if you're a long-term investor, I would say that these funds are better suited for lump sum investment. You don't have significant downside. As you know, as I say that never make a big lump sum investment in equity. That is not the case with fixed income funds. But of the three funds, I would say that this is this is a fund where you should be looking at deriving periodic income or great stability. It does not take it's not a big interest rate bet. The other two are.
All right, so that's our list of income funds: Reliance Regular Savings Debt Option, the first on the list, Tata Dynamic Bond Fund and UTI Dynamic Fund. There are also short-term funds that Dhirendra has been kind enough to pick out for us. Coming in at number 1, Peerless Short-Term, Sundaram Select Debt Short-Term and UTI Short-Term Income Fund. Dhirendra, with the short-term funds, of course, a lot of times viewers get confused about the fact that they're so similar, both in their returns and, in the investment pattern. So how does one choose from, the various options of short-term funds available in the market? Tell us what your criteria for judgment was for this particular list.
No, I have been guided by the performance, and I was guided by the performance and trying to, and I have weeded out the funds which were very erratic. That apart, I showed my preference for the funds with lower expense ratio, because everything else being equal, the fund with lower expenses will deliver superior return. And consistency of performance, because there is a possibility that investors coming in these funds will be coming for few weeks or few months at most. And so it should not be a fund which has done very well in a specific period and struggles in another period. So consistency of performance, lower expense and decent return. These are three factors which leads to these three funds.
Well, obviously someone who's using a short-term fund is going to come in for a couple of months, but tell us, what is the ideal time horizon or the ratio that we should stay invested in a short-term fund for?
I would say that, if you have redeemed your investment, if you have sold your asset and you're wanting to, redeploy it, and you are on the lookout for a house, or done your redemptions or taken your money out and planning your child's admission and plan to spend that money, these funds are meant for that. Money for few weeks to few months should be deployed here from an individual point of view. Money for few days, I think, one should look at liquid funds.
All right. So remember, there's always that opportunity loss when maybe an investment that was running up till now suddenly matures and the money comes into your bank account. It's just sitting there. It's earning about 4%. It's taxable. It makes more sense, like Dhirendra says, to move it into a short-term fund while you make your plans, or while you decide how you're using that fund or that money over the next couple of weeks or the next couple of months. Dhirendra, thank you so much for joining us on the show and giving us this entire list of funds that we can use over 2015. A quick reminder to our viewers, you can of course write to us if you have any questions about the funds names that you heard, or if you want the list, we'd be glad to send it to you. Next week we're talking about gold in the studio, so if you have questions about gold, please feel free to write to us. Thank you so much for watching.